Tuesday afternoon, morning, wherever you're at. Hope you all had a fantastic long holiday weekend. I know I had a very relaxing one. I don't know if anybody expected us to come back and see the markets down as much as they are right now. S&P's just rallied off of the bottom a little bit. They were down 90 plus. Now they're down about 80. The NASDAQ is down about 1.5%, which is just over 300 points. The Dow was just down about 500 plus points. That's come back a little bit now. I think besides all the uncertainties that we had talked about heading into September, this week's eco data, which we're going to talk about, tariff stuff, just September historically not being a good month. I think a lot of this news over the weekend with the ruling that the tariffs are, possibly illegal, that has sent the market some new shivers, and rates are going up because of that, which is putting pressure on the market. All right. So what do we have today? Let me bring this up here. All right. First, please smash away, everybody. Smash, smash, smash away. Like us, please. Everybody like us. Would really appreciate that. That would be really, really helpful. All right. So we're going to talk. We've talked about, feels political to you. I'm not sure. We're not getting into anything, any politics here. All right. No politics in Market Minds here. Just fact, news, data, strategy, all that stuff. So we talk about economic indicators a lot. This week, we are packed with economic indicators that mean a lot of different things and are very important economic indicators. We already got a couple this morning, and that could be playing into also why the market is weaker today, because more weakness shown in some of the data. But first, before we get into the data, let's talk about this September effect. Okay, we talked about, I don't want to say incessantly, but a lot, how August and September are the two worst months of the year. And there is something called the September effect, just like there is a January effect, just like there is a Santa Claus, rally. The September declines have a name to it. All right. And this is really all we have to see. If we look at this data here, okay, the Dow Jones data here is 128 years old. The S&P is 97. The NASDAQ is 54. The Russell 2000 is 38. So this is not just taking data from 1 or 2 years or 1 decade. This spells it out. This is why people are so concerned about September. Most people think October is the worst month, and that's because we had the October crash back in '87. So since then, everybody's been worried about that. It's actually September. But let me keep this in front of everybody here. Oh, most importantly, what does this say? Can you read it now, Pete? All right. It's a takeoff of every breath you take from the police. Every snack you make, every meal you bake, every bite you take, I'll be watching you. Life is good. So, it's always about the dogs. I would just be really careful, guys. Everybody said, here, hang on 1 second. How about if we do this? How about that? Is that better? Okay. Now, let's get back to this. This year, we have seen a lot of this historical data not being followed, the trends not being in line. So, yes, this is absolute historical data for September, but you know, just take it into consideration. It doesn't mean trade off of it, but take it into consideration. So let's talk about the big data points this week. And this is just in 4 days. Remember, we have a shortened week because yesterday we were off. So the first two on here, ISM manufacturing and construction spending, those already came out this morning. We'll review it. Tomorrow, Red Book and JOLTS, what the heck are those? Then we get Beige Book, Challenger job cuts, ADP non-farm payrolls, and then Friday is the big one, the non-farm payroll report. Okay, so this morning we got this ISM non-manufacturing index. Okay, what the heck is that, right? It's just another number, right? Well, it actually is a very important number because it measures the economic condition and performance of service-based companies. Okay, it's really a barometer of the health of the overall economy. A reading above 50 means we're growing. A reading below 50 means we're in contraction. Okay, this is one of those data points that is considered a leading indicator. It's not looking in the rear view mirror like GDP. This is something that helps us to see what the current trends in the economy are. Okay, and the number came in lower again today. Okay, industrial production, it fell for the 6th straight month. Things are slowing down. Also this morning, we got US construction spending. That's another big one. It fell again in July. Why did it fall? Mortgage rates are still high. Okay. And it also we saw a June number. This was for July. We saw a June number, okay, unrevised, down 0.4%. But one thing to keep in mind here is the inventory of completed new homes for sale, highest in 16 years. It is the highest in 16 years. Okay, people just not really going out and buying new homes. In fact, there's another data point. We'll talk about it another time. There's another data point that for the first time ever, okay, used homes or, not new construction, the average price of a resale is more expensive than the average price of a new home. Kind of crazy what's going on in the housing market. Now, tomorrow, two big ones tomorrow. Okay, Red Book, JOLTS. Okay, what is Red Book? Okay, Red Book looks at consumer trends, same store sales growth. Okay, but most importantly, it's consumer spending trends. The thing that is so important about Red Book and why it's very closely watched is because this is one that does take into account adjusting for seasonality. So it adjusts for back to school spending. It adjusts for Christmas spending. It adjusts for a typical lull that we'll see in January, February. Okay, so it's another benchmark. It is another data point to see how the consumer is doing. Now, this next one that we get tomorrow is huge. JOLTS, okay, stands for Job Openings and Labor Turnover Survey. We always get JOLTS on the first Wednesday of every month. So it's the Wednesday right before we get the non-farm payroll report. And what it does, it tells us how many job openings there are out there. Okay, it also tells us how many were hired and how many have quit their job or were laid off. Okay. This is a huge economic indicator. Okay. It's gathered by the U.S. Bureau of Labor Statistics. No political comments here. It is a key indicator of job vacancies. Okay. So it provides us really critical insights into employment trends, recruitment, hiring, and then the criteria for JOLTS here. A job is considered open, okay, if that position exists and someone could start in that job in the next 30 days. Okay. As the number goes up, think about this. Okay. Sometimes we just, we'll look at the benefits, the downfalls, the pluses, the minuses, and we'll just, believe what the numbers say without thinking why. But think about this. As the number of job openings goes up, that means there is a demand for labor. Okay. That signals a pretty robust economy. Okay. So tomorrow we will get that JOLTS number. Redbook comes out before the market opens. JOLTS comes out, I think, at 10 in the morning. Okay. Thursday, besides the weekly jobs numbers, which we get every week, there are two other jobs numbers ahead of the non-farm payrolls on Friday. Okay. Typically, these come out earlier in the week of jobs week, first week of each month. But because of yesterday's holiday, they're sandwiched together both on Thursday. The first one, the Challenger job cuts, it gets a lot of press. It gets a lot of headlines. It's not a market mover. Okay. It is not a market mover. And what that does is it's exactly what it is. It's a survey, and it shows the announced corporate layoffs by industry and by region in the country. Okay. But as I have here, let me circle this. This one you definitely have to, why isn't my pen working? There we go. This one you definitely have to take with a grain of salt. Okay. Because it doesn't talk about short-term, long-term layoffs. Okay. It doesn't talk about attrition. Okay. It's really more or less just another weekly data point, like the weekly jobless claims we get, but it comes out once a month. So whatever this Challenger number is, okay, I would not really take too much into consideration. Hey, Mike Luch, you see that note that's up there? You can pop on here. It's okay. Mike, you see that about Facebook? I'm not sure what's going on. Okay, I'll let you take care of that. Okay, awesome. Okay, then we also get on Thursday the ADP National Employment Report. Now, this is a big number. This one comes out, it's the precursor to non-farm payrolls on Friday. Okay. And it is a measure of monthly hiring or the change in the job market, non-farm. Okay. So private employment, it is a survey based on 400,000 US business clients. Now, in the past, when I say in the past, I'm going back 20 years. In the past, it has been a pretty good indicator of what we could expect to see in the non-farm payroll report. And these changes are very volatile month to month. But recently, this has been a number that has been way off base. For the last, I'm going to say maybe even over the last year, this data has not really reflected what the non-farm payroll report has been. The market will react on this. Okay, it definitely will react on this. But again, caution. Now, before we go into non-farm payrolls, let's get our word out there. That picture was taken yesterday. They look like some happy pups. We will let that marinate there for a moment or two. Word of the day is not Illini, which is going through the bottom there. Word of the day is pups. But I suppose if you put Illini in there too, we will get you in the wheel. Okay. Let's talk about the big guy on Friday. Okay. Now, this is data from earlier in the year. Okay. We know that there has been revisions, lots of revisions in the non-farm payroll data. We know it has been politicized beyond belief, which we're not going to talk about. We know there are people out there that say not to believe it now. There are people out there that this is a tried and true. We need to believe it. There has always been revisions. Okay. But the job market is slowing. It is slowing. Last month's job market, non-farm payrolls of only 35,000 was awful. It was awful. I believe, and this will get revised again before Friday, I believe right now, looking for 110,000 for that number. Now, if we get a number, a non-farm payroll number that is much higher than expected, okay, you would think that's a good thing, right? More people are going to work. And that is a good thing. But in this day and age, and in this the environment we're in right now, if we get a super strong jobs number, the market's not going to like it. Market's not going to like it because a super strong job market means economy's healthy, it's on track, it's growing, all good things. However, at the end of the day, what it means is that it's going to put pressure on the Fed to lower rates. Because if the market is streaming along here, the Fed doesn't need to lower rates. They lower rates to get the market moving. So if the market is already healthy, there's a lot of strength, that will put pressure. See, Dorothy, that's exactly what I'm talking about. Now, let me ask you, Dorothy. Okay, it's going to be a fake number. What's the fake number going to be? Higher or lower? Okay, let's talk about this because we're going to talk about this in the sense of what it could do to the market. So what's the fake number going to be? Are you saying that the administration is going to put out an unusually really high or really strong NFP number? Is that what you're saying? Okay. So I'm going to challenge you on this. I'm going to question you on this. If it is a fake number that's higher, that looks really good for the administration, wouldn't they be shooting themselves in the foot? Right? On the one hand, boy, they want to see that the economy is doing well. right? That's their benefit. The economy's doing well. Great. More people are happy with what is going on. So if the economy is doing well, which is what they want, then yes, that puts pressure on the Fed to not lower rates. Okay. So I think, we all get caught up on one side or the other of believing, not believing, whatever it is. But I think that there's too many times that people say things and don't really understand what the consequences are. So anyway, last month, what happened. We got that really, really, really low number. And we're gonna have a final call for word of the day here. Okay. We had not only a low number for July, but May and June were revised down considerably. Now, before anybody says that number was fixed or blah, 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 if you look back in the history of non-farm payrolls, you will see revisions happen all the time. Okay, you get a weak number, that means there could be a slowdown in economic activity. What does that mean? That means, well, lower rates would help spur economic activity, right? So it is a balance. It is, this vicious circle there. And we know that the market will move on this non-farm payroll report. Okay, there is so much at stake with the Fed here. Now, depending on what the number is, even if it's a really, really strong number, that probably doesn't change that the Fed's going to cut in a few weeks when they meet in September. Right now, I think the odds are a 90% probability that they're going to cut. If it's a really strong number, what it might do, though, is we'll get that cut in September, but maybe it tempers the cuts for the rest of the year or going into next year. If we get a really weak number, if we get a really, really weak number, the Fed's still probably only going to cut by 25 basis points in September, but maybe now that adds probability of quicker and maybe bigger cuts moving forward. All right. Can I give some insight on Zscaler and AVGO? I sure can. In Zscaler, we have a position on, which we actually just got out of half today, just looking for a move in either direction. Here's the chart on Zscaler. We have what's called a strangle swap on, basically a calendar call spread and a calendar put spread. We don't care what it moves as long as it moves. Okay. AVGO has earnings after the close on Thursday. Yes, the big guy there is a golden doodle. Now, if this was not earnings, I'd probably be buying the heck out of AVGO here at this 50-day moving average support. But we do have to consider that earnings could, maybe change that a bit. So that's really what I see in those two. All right. Mike, how we doing on the wheel? That's Bear. He's a golden doodle. This is Kobe. That's the one that caused my black eye. The one that never leaves my side, the one we rescued. He's almost 14. And this is Bella, our cockapoo, who's also almost 14. Dogs are the best. There is no question. Dogs are the best. All right, guys. Oh my goodness gracious. Are you sure? Luch, I'm not sure that is right. Hang on, guys. I got to look at this. I got to look through the names here for pups. I don't think this thing is filled up. Yeah, we are definitely missing some names on here, guys. I am going to try and add in who I see missing because there are a bunch. So give me 1 second here, everybody. And I'm going to do it just with first names here. Luch, what'd you do here, man? Holy smokes, Luch. Killing me. Everybody just hang with me here. I want to make sure we get this right. Video, Ralph. Everybody hang with me here, guys. Got to make sure this is fair for everybody. Luch. Hang on here. I am doing my best here, guys. And if I don't get everybody on here, I promise you will get 2 entries tomorrow. Give me 1 more minute here. Luch, you sure you sent me the right one? I don't see any of these on here. Sorry, everybody. Hopefully I'm not losing you. And yes, you still need to be here to win. So I am just trying to, and you can ask me some questions, guys, while I'm doing this if you want. Connie, Brad, and John, yes, I am in Colorado. They must be Illini pups. You better believe it. You better believe it. George, you might be the last. You're in there. Okay. Paul, Quinn. Okay. I think we are up to date here. And there we go. Okay. Let's get this going now. All right, everybody. Here we go. And if your name, for whatever reason, we missed it, you'll get 2 tomorrow. Winner today, Stephen W., Dave S., or Maria. That's going to be close, Dave S. Dave S. Dave S. Let me go back here and see. Are you in the house, Dave S.? Please let us know so we can give you instructions. Still looking for your last name here because I was just running through. Dave Schubert. There we go. Dave Schubert, are you here? Yes, that means you. You are here. Awesome. 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 Please send me an email. There it is up on the screen. Now, before we go, okay, before we go, who loves Charlie Moon? Who loves Charlie Moon? because Charlie is going live tonight at 7 o'clock. He is going to show everybody. There we go. How his AI system works tonight, 7 o'clock Central Time. Yeah, Charlie's the man. Charlie is the man. All right, everybody. Sorry for some technical glitches today. I appreciate all of you. Where's the market? Oh, the market actually rallied now. S&Ps are only down 71 points. So we'll see what happens the rest of the day here, guys. But again, all this eco data, it's going to be real busy. It is going to be real busy. All right. I appreciate all of you, and we will see you tomorrow.